This is the D's 25 corn chart, and I'm sure a lot of people have been talking about it online. This gap fill at 432 and 3/4. It's kind of riding this ridge of this 100-day moving average in blue as well, and we've been unable to fill the gap. So if we get some positive news to end the week, we still have these big concerns about yield in Iowa. Yields coming kind of so lackluster in many parts of Illinois so far. Disease pressure 2025 is going to go down as the year of southern rust. What does that mean? The USDA has been projecting Iowa at 219 based on yield surveys and satellite imagery. We're starting to get into these early yields as well too. And I would say so far a little disappointing, definitely less than last year for the anecdotal yield reports we've heard from Iowa. But all of that excitement is kind of being built into this 10% rise off the low right now. And I still think when you start to get into some of these other states, and I know there's a lot of people online kind of poo-pooing what the far west can do to kind of bring up the national yield, because Iowa and Illinois are down for the year. Even if I mark down 10% from current projections, Iowa, Illinois, we're still talking about a massive increase in production than we've ever seen before because of the acres. If we just keep all the other states at the current USDA projections. A macro view, like, okay, just let's concede Iowa and Illinois yields are down. How is the balance sheet going to end up still? We still have a lot of excess demand written down, huge feed demand number. I know our export numbers are what everyone's talking about, and that makes sense that that's where a lot of the support and the corn's coming in. But we still have to prove a lot of things when it comes to feed and really prove that we can continue to export at this aggressive pace all the way through our window, and we're not going to hit a wall of South American corn at some point. Year over year increase, 20 million metric tons that we may have to compete with. I want to kind of just take a step back, and I know that we're pretty geared up to be rising because of Iowa yields, but I do want to just kind of remind ourselves that balance is key here. If you happen to be in one of those areas that's above average yields, this rally is kind of a gift, especially if you're not insured all the way up to 95%. Even if you are insured to 95%, and your yields are 10% above average in your area, you're not in an insurance payment because the revenue is there from extra yield. So I just want to kind of take point just to make note of this latest corn rally and this gap fill. It's kind of a critical point to be talking about this. We could just as easily rally another 30 cents as we could break 30 cents. But I don't know that it's going back down. I just know that we're starting to see where risk starts to rise again if it goes back down, especially if it continues to go down after October when insurance is expired.